Okay, we're going to go ahead and get started. Thanks to those of you that have joined us. My name is Jennifer Young, and I'm the sales manager here with University Federal Credit Union. And this is our first-time homebuyers webinar. A few housekeeping items. We just want to let you know, if you do have questions, we really encourage you to go ahead and type those in. You'll see where you can type those in at the bottom of your screen. And we'll get to those questions periodically through the presentation. But we'd encourage any questions, not only first-time homebuyer, but anything related to real estate and mortgage. We'd be happy to work with you and answer those questions. Today we've got joining with us Derek Power with Exit Realty Success. This is his information so that if you do have questions, you're welcome to reach out to him directly. Derek has been in the industry for quite a while and is happy to answer any of your real estate questions. Okay, we're going to move forward. We wanted to make sure that you have information today provided addressing any purchase of a new home, whether it's purchasing your first home or whether it's purchasing an additional home. We're also going to cover additional information on construction and short-term and long-term programs. Just so that you know, for University Credit Union offers conventional FHA, VA. We also offer fixed and adjustable rate mortgages as well as short-term construction and jumbo. When you're purchasing a home, we want to help you through that process and have you prepared for what to expect. Now, during that process, you're going to be completing an application. The application includes information that has like your employment information, income information. It also includes asset information. It gives us a history on where you've been living, that type of information. Through the process, we're also going to be providing you with a pre-approval letter that tells you just tentatively what you're going to be able to purchase as far as a home. It gives you a purchase price, it gives you a loan amount, and a range as far as interest rate and down payment and information. Just gives you an idea of what you qualify for. And that pre-approval letter is what you're going to take when you go out with an agent to find a home. Now, finding a home is the hard part, and that's what comes next, is you're going to be working closely with an agent. And buying a first home, I'd really encourage you to have an agent involved with you. It's really important to have a professional that knows the industry and knows the process to be an advocate for you. And we really encourage you to have an agent on your side that's working with you. To find a home, that process is difficult. It takes a while. And if you've got somebody on your side, it really helps through the process. And then after you find your home and you're under contract, once you make an offer on that home and you're under contract, you'll receive what's called a formal approval. That formal approval just gives you any last minute things that the underwriter may want concerning you or concerning income or concerning the home. Through that process in providing the formal approval, an appraisal and title are pulled. The appraisal is done on the home and title information is pulled. Once we evaluate all of that information, excuse me, and that has been signed off by the underwriter, then you're ready to close, and that's when you'll go to the title company and sign your closing documents and receive your keys to your home. Now, there are a lot of variables that you can anticipate that will affect your payment, and we want to help you through and understand those. Now, the down payment on your home, you can do as small as a 3% down payment, or you can do anywhere in addition to that. The minimum down payment for first-time home buyers with us is actually 3%. That 3% is on a conventional loan, and that allows you to finance up to the 97% of the property value or the purchase price. Some other things that affect your payment are the condo or HOA fees. If you choose a home that's in an HOA is Homeowners Association. If you choose a home that's in an HOA, then there may be some HOA fees that you need to cover, and condominiums, townhomes fall within that category. PMI insurance stands for Private Mortgage Insurance. Private mortgage insurance is an insurance that protects and allows you to finance a larger percentage of the purchase price. So in other words, instead of having to save up and put 20% down, you can put 5% or 3% down and have PMI insurance and still buy the home. Now, property taxes Homeowners insurance, those are two variables. Those are depending on the property, where it's located, what the property taxes would be. There's all sorts of different values around the value, and those are things that you can find out from your agent as well. We can also help you look up those values. And your homeowners insurance is the coverage on the home itself. That insurance protects your home against fire, flood, those types of things. And that is up to you to choose. You choose the agent, you just let us know what company you've decided to go with. Now, credit is the biggest variable that has an impact on your payment. Your interest rate, your down payment, all of those things are determined by your credit strength. In the following slides, we're going to show you a few comparisons. Just to give you an idea on mortgage insurance, the impact of your credit, if you look in the column at 3% down, if you have a FICO score that's very strong, in other words, 720, 740, you can see that if you look at 3% down with 740, your mortgage insurance monthly would be $160. Now, if you look at the 640 FICO score, you can see that the monthly amount would be $476. That goes to show you the impact of having good credit and how much it can save you on a monthly basis. Now, if you look over the 5% down, likewise, 740 would be $105 a month, and 640 would be $319 a month. Those savings are significant and allow you, with good credit, allow you to actually qualify for more and give you a stronger purchasing power. Now, we like to show you University Credit Union, the credit union family, we are eligible for a discount from the mortgage insurance companies. If you were to finance with an outside company, a broker or a bank, you would actually have a higher premium monthly than what you would have with a credit union. Credit unions are allowed to get a discount from the mortgage insurance companies, and this allows you, again, significant, stronger buying power. Some additional things that you need to consider when you're purchasing a home, we like to make sure that you're prepared so that this is a really good experience. We want you to have a good overall homeowner's experience. So the closing costs that are involved in the transaction are fees that go to us and to other entities that are involved in the transaction, the appraiser, credit reports, the title companies. Those are costs that are involved in the transaction, and we like to go over all of that with you so that you're prepared for those expenses. We also want you to prepare for some of the expenses directly related to the property itself, so appliances, furniture, repairs that might need to be done, whether they're repairs before you move in or repairs that you move in after that you move in that you find that need to be handled. Window coverings, again, if we address if it's a condo or if it's single family, if it's a single family home, you may need to cover the expense of maintaining a yard and the upkeep of a yard. If it's a condominium, you may not have those additional expenses, but you'll also have the HOA fees, and we want you to be prepared for those. Now, a lot of times we get asked the question, do you offer construction loans? And the answer is yes, we do offer construction loans. One of the things that we run into quite often with first-time home buyers is they'll come to us and say, we're building a home, and what they're really referencing is they're buying a home that's under construction with a bigger home builder. So somebody like Destination or Candlelight or Garbett. Those builders, actually, you don't have to do a construction loan. You actually just are prepared when the home is finished being built. You get to personalize the home. You get to choose finishes in the home, but you don't actually have to provide the construction loan. And so construction financing isn't necessary on those types of properties. You just do the long-term, your long-term mortgage. But we do offer custom construction loans, which are offered to, if you wanted to find a piece of property and work with a custom home builder, work through the set of plans, do a cost breakdown, and then we offer the construction loan on that. You actually can finance up to 95% of the cost or the value of that property. So in answer to those questions that we've seen from time to time, yes, we do offer construction loans. We actually love to do those. So why now? I'm going to ask Derek this question, Derek Power, our agent. Why is now a good time to purchase a home?
No, that's a great question. I get asked that question quite often, and I think the answer to that question really is based on the buyer. For a lot of individuals, it could be based on your personal situation. Are you renting? If you're renting, then certainly buying a home makes a lot of sense. A lot of renters don't realize that they're paying a mortgage already. It's just somebody else's mortgage. So it would be certainly nice to take that money and to apply it towards themselves, which would allow them to build wealth over time and security within their own home. There's also huge benefits within our current market. I mean, mortgage rates are still at such historic lows. In fact, I look at it every day and my jaw drops. It's really surprising and exciting, and I would love for everybody to be able to take advantage of that. And then we're very blessed because we live in an economy here in Utah that is really on the rise. Real estate has been performing exceptionally well since 2012. And when you look at the studies by the economists that are in the know, they indicate that real estate is going to continue to really improve over the next several years. And so it's an opportunity, if you buy now, to position yourself for some strong potential equity growth in the very near future. So those are a couple of the reasons, but I think overall you might need to look a little bit more internally to find out what reason really resonates with you.
That's great information. So one of the things that you need to know, we're going to work with you to evaluate your situation. If you really don't know if it's a good time for you, come in and sit down and talk to us. Let us go through your situation. Let us look at what your expenses are. Let us look at what you're paying and help you get an idea of what you're looking at and anticipating with purchasing a home. Let us run some numbers and look at what your budget will hold and work with you. We'll give you lots of options. That's what our job is. Our job is to give you options, and your job is to choose what works best for you, because in the end, really only you know what works best for you. So it's just important to get in touch with us. Let us work through some things, answer some questions, and see what's in your best interest, and then you can go from there. Okay, just to give you an idea of where you can find us, if you go to our website at ucreditu.com, which I know you all know because you're at this webinar, if you hover over the Home Center, then you can see that Contact a Mortgage Consultant comes up. If you click on that mortgage consultant link, it takes you to the page where you'll find each of our mortgage consultants. Now, just quickly, we have 7 mortgage consultants with the credit union, and they are at various branches, and they're happy to go ahead and meet you at whatever branch is convenient for you. So if you see that your closest branch is up at Research Park, there's not a mortgage consultant up at Research Park, but every one of us are willing to go ahead and meet you up there. So just reach out to us, let us know what's most convenient for you, and we'll go ahead and meet you there. Likewise, you're welcome to go ahead and do your application right online. So if you click on the link on one of the loan officers, it takes to their individual brand or the individual website, and you can click right on an application from there. So we give you lots of different options to reach out to us and start your application and go through that process. Okay, at this point, I'm going to turn the presentation over to Derek, and he's going to go through the real estate side of it.
Thank you. 2 words, house and home. One of the things that I love about the University Federal Credit Union is that they are committed to helping you to find a home, not just any old house. And there's a big difference there. Obviously, if you're looking for a home, you're going to want to make sure that you have the opportunity to view as many different options as possible. Gone are the days where you would go to the grocery store and pick up that newspaper magazine type thing, see one picture of a home and less than 100 words in a description. Fortunately, we now have the internet, which allows us to see a lot of pictures, allows us to review a lot of information on different properties. But it is really important that as you utilize the internet, that you're finding websites that are going to function for you. A couple things that I want you to look for in that website. One is you want a website that offers a live feed to the Utah Multiple Listing Service. That way you're getting the most updated information in real time. That website should have the capability of filtering out homes that have recently gone under contract or have actually sold, And it should also have the ability to send you updates on homes that have recently had price reductions. A good website is going to allow you to initially enter information that is important to you, and then to save that criteria so that moving forward, it's only sending you properties that apply to you. Now, the university has actually created a search website for you. You'll find it on that same initial page under Home Center, and then right in the middle you'll click on Home Search. See, click here. And when you click on that, it'll take you to a page that will allow you to enter whatever information is most important to you. Typically, people will start on the right side and they'll select a city or an area. You'll have the option also to select maybe a map view where you can highlight a specific neighborhood, like maybe you're interested in the Harvard and Yale area. You can select just that area to look for homes. You can also further refine it on the left side by selecting a price range, the number of bedrooms, the number of baths, even schools that are important to you. So the credit union has done a great job in creating a website that's going to be very functional in helping you to look at homes that are specific to you. Now, let's say that you've been utilizing that website and working with your realtor and you've found the one, the property that feels just right for you and for your family. Now it's time to make an offer. And one of the first things that you're going to do in that offer is you're going to commit to what is called earnest money. This is typically somewhere between 0.5% and 1% of the purchase price, and it shows the seller that you're serious about your offer, about purchasing their home. It's kind of like skin in the game, but it does more than that. It also protects you as a buyer, because as we go through that purchasing process, you're going to be investing money in things like inspections and appraisals. You're going to be investing time, energy, and even emotion. And should the seller default, there are provisions that would allow for you to receive back an equal amount to the earnest money that you committed up front, Now that earnest money is going to be protected. There are several deadlines during the offer process that will protect it. And it's typically deposited with your real estate brokerage, and they hold it in a non-interest bearing escrow account. And then at the end of the process, it goes towards the down payment at closing. Now, prior to making an offer, you and your realtor are going to want to do some homework. Obviously, we're going to want to review comparable sales in that neighborhood. We're going to want to make sure that we understand how that property was initially priced. Is it priced high? Is it priced low? Is it right at market value? Because that's going to determine how and what kind of offer you're going to want to initially make. You're also going to want to look at market trends. Are we making an offer on a property in the spring where values are increasing quite a bit month over month? Or are we making an offer as we move into the winter months where we might see, things slowing down a little bit? How can we be as competitive as possible? As a realtor, I even call the listing agent prior to helping you to write up an offer. I like to interview them. I like to know as much as I can about the seller and also find out if there are already offers in place. What kind of competition are we going up against? Your realtor and your lender are going to work very closely together. They're the core team that are working for you and helping you to find, acquire, and purchase your dream home. So along with this purchasing portion of the process, your lender is going to be discussing with you the best down payment to make on perhaps that specific property. They'll help you to understand what your monthly payments are going to look like, and they'll take into consideration everything from the principal and the interest to taxes, homeowners insurance, the HOA payment if it falls into a public urban development, etc. And then finally, they're going to help you to understand what kind of closing costs that you're going to be looking at if you were to move forward with this particular home. In many cases, we've found sellers to be very open to considering a contribution towards the buyer's closing costs based on the total overall view of the offer. And your realtor can help you to look at making those kind of requests on that particular property. What if you fall in love with the hot tub in the backyard that's underneath the gazebo? That's a question I get all the time. And you know what? You will and you might. The good news is you have the opportunity to ask for other things besides just the house. In my case, it was the Sub-Zero fridge and the Wolf range. I fell in love with those, and so they were certainly included in my offer. But yes, you can ask for those types of things. Maybe you're looking at a home that just has a spectacular backyard and there's an incredible playset back there, and that was the one thing that really attracted you to that property. Well, your realtor can help to write those types of items into the offer, and we can ask for them. Another thing that I strongly encourage you to consider asking for in your offer is a home warranty. We want you to have peace of mind after you buy that home, especially if it's the first home that you've ever owned. And to provide that kind of worry-free living, a home warranty is going to go a long way. Your realtor should have a list of companies and probably one or two that he or she really prefers that they can recommend that you get in touch with. Your warranty is typically going to cost somewhere between $300 and $500, and it's going to cover the major systems that you find in that home for the first year. And when I say major, I mean major. Things like your furnace, your air conditioner, the water heater, all of the kitchen appliances, the entire electrical system, the plumbing, etc. What will happen is if during that first year you find something is not working, and you know it was working when you initially did your inspection on that home, you can then call the home warranty company. They'll send out an individual who specializes in whatever field that you're having trouble in. There's a very minimal $60 fee as they come into the home and as they look at it. And then the warranty company covers the rest of the costs for the repair or the replacement of that item. I have found that the majority of sellers in Utah are willing to pay for this home warranty. You just need to ask. And one of the beauties of your home warranty is that you can renew it each year that you continue to own that home moving forward. In your offer, there are going to be 4 key deadlines that are going to protect you as you move forward. They're going to protect your earnest money and your obligation to purchase that home. The first one is called a seller disclosure deadline, and that typically lasts for the first 3 to 5 days from when you initially go under contract. The second one is the due diligence deadline, which is 10 to 14 days out. The third is the financing and appraisal deadline, which is 21 to 30 days out. And then the final one is the settlement deadline, which is 30 to 45 days out. And we're going to talk about each of these in a little bit more detail moving forward. First, the seller disclosure deadline. Now this, as I mentioned earlier, typically lasts about 3 to 5 days in. And during this period of time, the seller has an obligation to provide you with some specific information. The first thing that we're looking for is what is called a seller property condition disclosure form. This is a 6-page document that asks the seller to address 25 questions related to the physical condition of the property. It covers everything: foundation, roof, exterior, interior. Have they had any challenges with water damage, with pests, etc.? This protects the buyer in writing in the event that something isn't disclosed. So it's a fantastic document that you're going to want to review with your realtor and perhaps moving forward with your inspector. Additional things that are going to be provided during this seller disclosure deadline would include CC&Rs. If you're purchasing maybe a condo or a townhome or in a community like Daybreak that is a planned urban development, as well as the financials for that area. This is all information that you're going to want to review. If anything comes up during this initial deadline and you're uncomfortable with it, you do have the right to cancel the transaction. You get your earnest money back, and you can move on and look for a different home. If you're fine with things, then you move on to what is called the due diligence deadline. This typically is a deadline that is 10 to 14 days from when you initially go under contract. There's a lot that you and your realtor are going to want to accomplish during this deadline. Foremost, and perhaps most important, is a physical inspection of the property. This inspection typically costs between $300 and $500. A professional inspector is going to go into your home, and they're gonna look at it through, an impartial set of eyes. They have no emotional investment like you might have, and that's what you want. They're going to be able to cover that home from top to bottom. They'll give you information on all of the appliances, all of the fixtures. They run your furnace, they run your air conditioner. They check everything. They want to make sure that you're moving forward with this transaction with eyes wide open. There are some additional tests that you may elect to have them do on that home. You may decide that you want them to test for methamphetamine contamination, perhaps radon, which is an invisible gas that can contribute to respiratory health problems, certain types of cancer, mold, lead. The list could go on. Based on what you learn during this inspection period, your realtor will have the opportunity to go back to the seller and to perhaps request certain repairs or maybe even a reduction in price. What we're really looking for here is not cracked tile, worn carpet, or chipped paint. What we're looking for here are major health problems, neglected maintenance. Perhaps someone was a do-it-themselfer and they finished out the basement and it doesn't meet code. We're looking for those big items that, should you discover them after you purchase the home, could cost you money. Now, most sellers understand that if their home's being inspected, that inspector is going to find some things. And so they're prepared for your realtor to go to their realtor with that list of repairs. In some cases, if they can, they may agree to repairing the home. In other cases, they may not agree, and they may not even be able to agree, and that's where a price adjustment may come into play. Now, the question comes up quite often, what if I find something during that inspection period that I don't like? I even had one person who, during that period, they realized that the pink bedroom, the blue bedroom, the purple bedroom, and the one with zebra stripes was a little too much, and they didn't want to have to repaint it all. Can I have a change of heart? And the answer is absolutely, you can. This deadline is designed to protect you. You do have the opportunity to cancel. You can cancel for any reason. We do not need to disclose that reason. And you have the opportunity to protect your earnest money that way. Now, should we move through that due diligence period and everything feels good, you're even more excited to move forward, we now enter that third deadline, which is called the financing and appraisal deadline. And as mentioned earlier, this is typically 21 to 30 days out from going under contract. One of the main things you're going to focus on during this period is that appraisal. It needs to be completed, and that home is going to need to appraise for at least the purchase price, and we all hope for preferably more. That's really exciting. Now let's say that it doesn't. And sometimes we see that, especially in a seller's market. If the home doesn't appraise for the agreed on purchase price, most sellers do understand that buyers need to get a loan, one, and two, they don't want to pay over fair market value. And so they're often very open to a renegotiation of price to that appraised value. Sometimes we may fall into a situation where they can't. Maybe they're upside down. And then you have a decision that you need to make. Do I want to move forward with the purchase? Do I want to come up with the difference in cash? Or do I want to cancel? And you have that option. You can cancel at this point. This deadline protects you again, and it protects your earnest money. Additionally, during this period, it's an opportunity for your lender, who behind the scenes is working furiously and very hard for you, to finish all of the paperwork that they need to turn in to move forward with your loan and to get that clear to close. And they're going to be asking you to help along those lines as well. There might be additional paperwork and additional things that they'll need you to provide them. It's important that we accomplish all of these things within this deadline. That way we can avoid any sort of a request for an extension on the final deadline, which is called settlement. This is where it starts to get exciting because we can see the finish line, right? The home is almost yours. At this point, we're typically 30 to 45 days into that contract period of time. Prior to going into a title company and filling out documents, we're going to want to do a final walkthrough of the home. That's typically 1 or 2 days prior. It could be more, but we're going to look for a couple things during that final walkthrough. First, we're going to want to make sure that that home is in the same physical condition now as it was when you first went into the home and initially made your offer. Second, we're going to want to make sure that anything that was negotiated and agreed to by both parties is still in the home. In other words, that awesome playset needs to still be in the backyard. And then third, if the seller agreed to any specific repairs during that due diligence period, we want to make sure that those have been completed. Once we're comfortable with the physical condition of the property, we're going to move forward with visiting the title company. That's typically a 45 minute to 1 hour appointment. That's where you go in and you sign all of the closing papers associated with the transaction. You're going to want to remember to bring 2 forms of ID. For sure, a driver's license, a debit card, a Costco card, something like that will work. You'll also need to bring the remainder of your down payment. So let's say your down payment was $10,000 and you had committed $1,000 in earnest money. You're going to need to come in with that additional $9,000. Or you can wire it. And after this portion is done, after you have signed with the title company, the seller signed with the title company, and your loan has been funded, it typically takes about 24 hours, so the next business day. And at that point, you've recorded. And guess what? Congratulations, you're now new homeowners.
And that's when we all celebrate.
Absolutely.
So we're going to take just a minute and answer some questions. If you'll. So some of the questions that we've had in the past, can you purchase a home if you don't live in Utah? Can you purchase a home in Utah, and do we work with financing on that? We don't really have a stipulation. You can live anywhere outside of the state, and we will do a loan inside the state of Utah as long as we can establish your membership with us. If you're already a member, then you're in and you don't have a problem. We can do that. I appreciate Derek taking the time to talk about the inspections. One of the questions that we run into from time to time is, what exactly should they inspect on a home? What kind of inspections should they have? And that's where working with an agent, working with a real estate agent, really gives you that additional benefit. They've got contacts, they've got a host of different selections on inspectors that you can go ahead and reach out to, and you can actually speak with the real estate inspector beforehand and say, I noticed this, could you pay particular attention to this, or can you check on this? They'll watch those things specifically for you.
Absolutely. And if I can add to that, that's why it's so important that you get those seller property condition disclosures up front. They may disclose in there that the roof leaked last year, and a good home inspector will actually crawl through the attic space and check that for you. And then there's other things that you might want to inspect as well, like the neighborhood or the school district. It's not just about the home sometimes. There's a lot that we can do to improve a house, and there's very little impact that we might be able to have on a neighborhood. So there's a lot to inspect during that period of time.
That's a great thing. So we have a question. Do we loan money for a manufactured home? That's a really good question. We do finance manufactured homes, but they do need to fall within a very specific category. There has to be a specific plate on the home that indicates that it has been placed on a permanent foundation and that it has not moved from that original foundation. And you can reach out to us and we can give you specifics. I believe the date on that is 1973. If the date is after 1973 or before 1973, then if it's before 1973, we do not deal with those. There are other options that you can look into, other lenders that will handle manufactured homes, but those we don't. But if it's been placed on a permanent foundation since 1973 and move forward from there, yes, we can work with those. So another question, what are the cons for having a conventional loan versus an FHA loan? That is a really good question. As I mentioned earlier, we give you lots of different options. And one of the things that we do is we sit down with you, depending on what your credit scores are and what your ability for down payment is. And we'll run a comparison of a conventional loan versus an FHA loan. The biggest difference between the two loans are interest rate and the mortgage insurance. With FHA requires that you have what's called an FHA funding fee that's attached. It's added to the loan and financed over the life of the loan, as well as a monthly mortgage insurance. And that is non-removable. The mortgage insurance on FHA loans stay for the life of the loan. The only way to get out of it is to refinance to a conventional loan. Now, on a conventional loan, the minimum down payment on an FHA loan is 3.5% of whatever the purchase price is. Now, likewise, on a conventional loan, we can do a down payment of 3% for a first-time home buyer, and the mortgage insurance is on it until you reach 80% of the original purchase price or the original established value. Now, for instance, if you get a loan and you put 5% down and you finance 95%, in 3 years, if the market has increased and you know that the value that you are at 80%, you can reach out to us. We will require that an appraisal is done on the property. You can reach out to us and we'll give you the name of an appraiser that's approved, and they'll go out, appraise the property. You're responsible for that expense, but if it comes back and you're at 80% or better, we'll remove it. Likewise, if you've been paying extra on your payment, say you've been paying, extra and you've paid it down and you know that you've paid it down to 80% of the original price, all you need to do is make a phone call to us and we'll remove it immediately once we identify that you're at 80% or better. That's if you take action and you reach out to us and let us know. On a conventional loan, if you do nothing, if you just keep paying your payment, you quietly go about and all of a sudden it reaches 78%, we'll automatically remove it at 78%. So you don't need to do anything, and at 78%, it will automatically fall off. The credit union doesn't have a minimum requirement that mortgage insurance stays on our conventional loans. We service those loans. And so once you hit that 78 to 80%, if you call us at 80%, we'll drop it off. But at 78%, automatically that fee comes off. So your interest rate stays the same, but your payment would drop because the mortgage insurance would come off. That's a really, really good question. One of the questions that we've received in the past is, can I do anything with a FICO score less than 580? We didn't address the minimum FICO score, and that was a really good question. So minimum FICO score for a conventional mortgage is 620, but we can go to 580 on an FHA. The best thing that I can suggest for you as a consumer is reach out to us. Let us pull that information. Let us get your FICO scores, and let us work with you to help you know what you need to do to get your FICO scores where it needs to be to accomplish your goal of homeownership. Whether it's 580, whether it's 520, we've worked with people getting their FICO scores increased 100 basis points, which has helped them save a lot of money monthly. The most important thing is to get somebody on your side. Let's get started, help you through the process, and work towards your goal. So question is, how do you know how much you can afford, such as, do you know if you can afford $200,000 or a $400,000 house? You know what, that is a really good question. The way that you qualify for a mortgage, without taking too long on the question or on the answer, the way that you qualify is based off of ratios. And your ratios are based off of your gross monthly income. So the way that we look at it is we take your monthly income, the gross monthly income, and we take about 43% of that gross monthly income. So 43% of that, we would subtract from that figure, we would subtract your legal monthly obligations. So if you have a car payment, if you have a credit card payment, if you have student loan payments, if you have child support or alimony payments, Any minimum monthly payments that you have a requirement on, we would subtract out that monthly amount, and whatever is remaining is the amount that can be spent on a mortgage. That amount, whether that amount is $500 or if it's $5,000, whatever is left over of that 43% can be put towards a mortgage. And then we would back into that. We would take that amount, subtract out what you would be paying for taxes and insurance, and if you have mortgage insurance, and whatever is remaining is the amount of a mortgage that you would be qualified to finance. And then we would again back into that and give you a purchase price. If that's the mortgage amount, then you would need 3% down if you're a first-time home buyer, or 5% if you're a second home buyer. So we back into that, and it's all based on ratio. So an overall answer is if you can keep your debt ratio at 43%, that's your overall debt, the home including other minimum payments. That tells us how much you can qualify for a home. And really the best thing to do, honestly, if you need more information, reach out to us and ask us. We're happy to crunch those numbers for you and give you figures on those. It's a really good question. Really quick, I want to show you the last screen is a screen that gives you the names and contacts of our mortgage consultants. Each of these consultants you can reach out to. The direct line is that 481-8840, and that rings a general number on each of their desks, and you can answer or you can ask any of those questions. One of the questions that we've run into as well, is there any benefit for first-time home buyers? Are there any special deals for first-time home buyers? We're going to forward a copy of this webinar to you via email, and you'll receive, along with that, you'll receive a $500 coupon that we're offering right now towards your closing costs. That $500 will go directly as a credit at closing towards your closing costs. And that's just specifically for you attending our webinar. First-time home buyers, traditionally, we offer that 3% down payment. That's not offered by all lenders. That's something that we have directly with our investors that offers a 3% down payment with conventional loans. And so that's a benefit for first-time home buyers. If you've owned a home within the last 3 years, then we would require a minimum down payment of 5%. So that additional 2% savings for first-time home buyers is one of the deals. Let's see, I'm going to ask Derek, is there anything else that you would like to add today, or any last minute comments?
Well, there were a few thoughts that came through when you were talking about the previous question, the cons and pros as they relate to a conventional loan versus an FHA loan. And I wanted to share just a little bit from the perspective of a seller. So often when a seller is selling a home, let's say they got multiple offers and the two best offers were at the exact same amount. However, one of them was a conventional loan and one was an FHA loan. The seller sees, kind of looks at that a little differently as well. And that comes down to how those homes are going to be appraised. With an FHA loan, often the appraiser will come in and they'll look with a little bit more detail into the home, and they might look at the condition of the roof. They might look at things like, does the home have railings on stairs, etc. And even though you and your realtor are going to already have looked at all of that during your due diligence period, and we're going to make sure that that's covered and that you're protected, that hasn't happened yet. That's in the future. And they don't look at that with a conventional loan. So often sellers really like to see offers made with conventional loans. Now, bottom line is sellers like to get offers, period. But that's just something that kind of popped into mind with that. And that's the kind of things that a realtor can help you with. Obviously, when you do find that property that you want to make your home, we want to make sure that your offer is as competitive as possible. And we'll look at a lot of stuff, that as well as other things included. But other than that, nothing else related to those questions has really come to mind.
Great. One of the last questions that we had was, can a foreigner get a mortgage with us? The answer is yes. That's a really good question. There are a lot of lenders out that tell you that you cannot. We actually do finance with a foreign visitor The only thing that we need to establish is we actually need some established credit here in the U.S., and we also need legal residency established. So whether that's through a visa or a green card, we need legal residency established in the state. So once you've met those two criteria, there's no additional requirements that we have. There's no additional down payment requirements, and we treat you the same as anyone else. So that brings up one other question. And of course, I just go blank. We just want to encourage you again, if you do have questions, we'll give about another 30 seconds, any last minute questions. But if you do have questions, reach out to us. We're anxious to help. We're anxious to give you lots of different ideas and thoughts and scenarios and help you through the process. If you do have an agent that you're working with, we're happy to help you through with that agent. But if you don't, reach out to us. We'd love an opportunity to share one of the agents that we work with. Derek has been kind enough to share his time and energy with us today. We've given you his contact information. Again, if you do have questions, you're welcome to reach out to us. Okay, we don't see any additional questions coming in, so I just want to thank you again for joining us. Have a great day, and we will see you next time here. Thank you.